What is going on, everybody? Welcome back to the channel. Thank you guys for joining me. I hope everybody had a fantastic Christmas, enjoyed some time with your family, your friends, got some relaxation. This week, from the 27th to the 30th, I believe, I'm not sure how many or how much opportunity there is going to be to trade. I didn't do a video yesterday on Tuesday. So we're going to do one for Wednesday. I'll see if I can get one out for you guys Thursday and Friday. As I said, I'm still out on vacation, so it's kind of spotty on whether I can get in to do these or not, depending on what we're doing for the day. So this is our watch list for Wednesday, December 28th. And normally I put these out for you guys every single day. Throughout the regular year, these come out every single day for you guys for free. I put out weekly swings, monthly swings. There is a yearly swing video coming out, so stay tuned for that. As we roll into January in a new year, we're going to see if we can see which direction a bunch of the stocks are going to go, the tickers are going to go, the ETFs, SPY, QQQ. I want to get an idea and put that forth to you guys as well to see where we can see if we can see, like I said, where we think they're going to go into 2023. The screen that you see in front of you guys, that's TradingView. If you go down below in the description, there's a link there. That link will give you a free 30-day trial to their subscription-based service. And then if you decide to use that sub-service, you'll get up to $30 off. So make sure you guys take advantage of that offer down below. I have a trading Discord. Make sure you guys are signed up for that. That link is in the description below. That is free. There is a paid portion, a membership room. That membership room gets you one-on-ones with me through Google Meets. It gets you the top 5 plays from these videos that I send out every single day. It gives you live trading bots on a bunch of different tickers: SPY, QQQ, DIA, Tesla, Disney, NEO, and a whole bunch of other ones. So the live trades, the trades come to you, the setups come directly to you, and you guys get to decide if you want it's something you want to get into or not, but you don't have to go searching for them. The 1-hour Strat course, like I said, I created, and then a bunch of other great stuff. So make sure you guys are checking that out in the Discord. Let's get started on this list here. It's not a large list, but we're going to go through. And I would tell you guys, if you're going to be trading at all this week, that the morning, and the morning is the best time, I think, anyways, to trade. But especially now, the morning is probably going to be the most volatile and the best opportunity for you guys to get in and out of trades. But just be very cautious, guys. If you're brand new to trading, I would sit this week out. I would go onto my channel and go check out some of the learning tool videos and really immerse yourself in that. And then when we open up in January, that's when I would actually start to look at trading. I mean, if you want to paper trade and look at the charts and see the way that everything is moving this week to get an idea, that might be helpful. But I think with the low volume, there's going to be not a lot of great movement for us to have opportunities to jump into trades. But we'll go through this list here and we'll see what we can find for you guys. So the first one I've got on the list is American Airlines, AAL. So AAL, on the previous trading day, had an inside bar. So today we went 2 up red. That means we only crossed the high side of the previous candle. So that was this right here on that inside bar. And we went 2 up, and then we reversed. So this is what we would call a failed 2. And so when we have a 2 up that's red, that gives me more probability that this trade is going to trend back down to the downside. So we look in situations like this, we look for this trigger right here, this yellow line. We look for triggers of $12.40, and we look for our option contract. So we're not taking a strike price of $12.40. We might take a strike price of, $12, maybe $12.50 in this scenario, but that's what we're looking at here. So when we look at that, we go from the trigger to the target. So our first target is at 12.33, second target is 12.23, and that's where we like to take our profit. But if the trade reverses on us before that, and that would be managed on a smaller time frame, that's where we are going to take our profit. So if you're wondering how to manage those trades on the smaller time frames, again, I have a whole bunch of review videos that you guys can go check out, and I'll show you exactly how to manage trades. And here's the thing, I have a lot of people ask me, how do you manage a losing trade? Well, you get out of it. That's how you manage a losing trade. I have plenty of videos showing you how to manage those winning trades, but you manage those losing trades the exact same way. You have your triggers, you have your targets, and then you hop down to a lower time frame to manage that trade. So we can look to get in off of this trigger, off of the 5, off of the 15, off of a 10, doesn't matter, any one of those charts. But once we trigger and we have a candlestick reverse through that trigger point in the opposite direction, then that's where you guys have to be able to get out and say, I'm just going to cut the trade regardless of whether that trade runs 300% later on in the day. You have to be comfortable just taking that small loss and looking for the next trade to get you that big win, okay? I know it's easier said than done, but that is how you become a successful trader, is you mitigate those losses and keep them small. And then when you get those winners, you let those winners run and you get stopped out the same way. Again, go check out my review videos. They'll show you exactly how to get in the trade, how to manage the trade, and how to get out of the trade. We move on to AMD. So AMD on the 27th here had a inside bar. So right here was this inside bar that we closed on. So on the 28th, what we have is a double inside bar. If you guys don't know about the inside bars, I'm going to explain them to you really quick. So the inside bar shows consolidation within the stock. It's a tightening range. And when you see these yellow candles, and you get those through the Griswold Strat indicator that I've created for you guys, along with this time frame continuity and the candlestick numbers and these blue bars, which represent a double inside bar, we go back in time and look. But these double inside bars, or the yellow bars, think of those, when you see those, as a spring being tightened, compacted, loaded, being squeezed. And when you let go of that spring, almost like a jack in the box, you look for that big explosion to the upside or the downside. And we're going to talk about that in a second. But let's go back and look. This double inside bar ended up going outside bar. So was it a successful trade? No. Was this one? We triggered here, and we didn't quite hit targets, but I mean, it came out fairly successful. You probably would have made a lot of money off of that option contract. Let's go see if we can find another double inside bar. There was a lot of scatter in that one we just looked at. And when we go, I apologize for the screaming again. I am not at home this week. I am away, so kids are playing, and it's a little bit noisier than normal. So we go back, and this gold bar, part of my indicator as well, represents a 3-1 setup. The double inside bars and the 3-1s don't happen very often. Here's the double inside bar. We have to go back to August of 2020 to find it. And these are the types of moves that we look for off of those double inside bars. Double inside bar and boom, big run up. That's the probabilities of these things. So when we look at any trade scenario, any strategy setup, we're always looking at it based on probabilities. And that's what every strategy is. Whether you're looking at this one, the Strat, or you're looking at something completely different, they're all based off of probabilities of what can happen. And we play those probabilities. Now, when those probabilities go against us, that's where the risk management comes into play. And you have to be able to manage that risk appropriately and really well. And the best traders are the ones who manage that risk the best. So that's really what it comes down to, guys, is yes, anybody can jump into a trade and be correct, but it's how you manage that trade when it goes in the opposite direction. That's really what makes somebody a successful trader. So we have this double inside bar, 2 straight days of consolidation. And if I give you a little example here of what happens with these, we have basically this. So this is an inverse broadening formation. And so we're tightening, and we get into this little, it's what you call a squeeze, and we're looking for that jump either to the upside or the downside. Now, one of the things we look for in this strategy is time frame continuity, which is right here: the hourly, the daily, the weekly, the monthly, the quarterly, and the yearly. If this trade trends down, which is what I would like to see, if this trade trends down, we are trading with time frame continuity right across the board. Now, my trades, I really only need the hourly and the daily, but anything extra that I have in the direction of my trade is a bonus, meaning there's just a higher probability that trade works out. So I would look for this trade to trend down, and based off of time frame continuity, that would tell me that I have a fairly high probability trade there. We move on to Amazon. Amazon also has this inside bar. So we just talked about the single inside bar or the double inside bars. Single inside bars work the same way. So again, we can look for calls at 85.35, puts at $83 even. And I'm just going to mark that down there as a second target for you guys. And that's the wrong color. We'll do it there. So there, that's a trade we're looking for. And again, I would hope that this would trend to the downside. That's the higher probability trade, but we'll see how that plays out as we run into Wednesday. Now again, I'm probably not trading, guys, this week, but I want to give you guys these setups in case you are interested in doing that. So BA is the next one. Boeing Company, 2 up, finish red. We're going to look for puts at 187.62, first targets at 184.72. The other thing I would tell you guys, if you're brand new to this strategy, if you're not really comfortable with options, I would only be looking for trades to the upside, and I would be trading common shares. Because common shares, it's a lot easier to really learn this strategy and immerse yourself in this strategy without losing a lot of money, meaning it's way easier to manage your risk. So I would for sure, if you're new, concentrate on common shares more than options until you get a handle of this strategy. And it shouldn't take you long. This strategy is quite simple. There's not really any indicators that we use like RSI or MACD or EMA lines crossing. We're using the candlesticks. Each candlestick tells us a story, and really our job is to, read what those candlesticks are telling us and learn what the story is and play that story out for ourselves to be profitable. So Microsoft MSFT had a 2 up that finished red off of this inside bar. So we call that a 122 rev strat. We talk about that in the course from the Griswold Gold membership. I also have some separate videos that discuss the 122 as well. So make sure you guys check those out as well. But we have a 2 up, finished red, so it's a failed 2. We're looking for puts down to the bottom side at 235.83, and our first targets are marked out. That's on Microsoft. So we move on to Walmart. Walmart has the same thing, this 122 rev strat, 2 up, failed 2 up red. So we're looking for puts on this at 143.19. And the first target, a lot of magnitude, meaning there's a lot of room for this trigger, from this trigger to this target. So a lot of room to move, to gain profit. Trigger at 143.19, first target at 142.28. And another thing you guys can do, like I've had a lot of people ask, like you're looking at so many tickers, how do I know, how do I get in, how do I know when to get in? Here's the thing, guys. On TradingView, you can right click and you can add an alert. Okay? So we add an alert only once. You can name the alert if you want. And then you can name the alert here. And you say crossing. This one would be crossing down. Okay? So and then we create that alert. And so you can put that alert to, let's say our trigger is 143.19 there. You can put that alert to 143.38. Okay, and we just save it. And so as we're approaching that trigger point, this will send you an alert, and you can say, yep, okay, let's switch over to that chart. Let's get our brokerage ready. Let's make sure we're ready to jump in on that trade. And it's really just that. And you can do that across the board on any ticker that you're watching, and you can hop over. And that way you don't have to be constantly sifting through and watching and trying to make sure you're catching the trade at the right time. So Bed Bath & Beyond, also an inside bar here. I'm going to move this target down because it is the same. We've got full time frame continuity, so puts at $2.45, which is what I would like to see, or calls at $2.59 to the upside. CCL, that's Carnival Cruise Lines with the inside bar as well. Nice time frame continuity to the downside. The majority is there outside of the quarterly. We'll look for puts at $7.55 or calls at $7.90. That's on CCL. We move on to Disney DIS, also with that inside bar. Again, full time frame continuity to the downside. So puts are the trade that I would really like to take here at 85.96, but calls are still possible at 87.94. The Google machine inside bar, full time frame to the downside. So again, let's look for puts here at 87.54. Well, it was an inside bar. It's a 2 down that finished red. So my bad, guys. Let's do that, and let's do that. I'm not sure why I had that. So we're going to take the Google machine off of there. We are at a 2 down red. So let's move on to Facebook, the metaverse. Again, 2 up red, so 122 rev strat. Full time frame continuity to the downside. We're going to look for puts at 116.05. First target at 115.25. 54. MU, that's Micron Technologies, a 2 down, finish green, failed 2, hammer candle. Okay, so it's got this big body at the top, big long wick at the bottom. It's what we call a hammer candle. It's an actionable signal along with the inside bars, or a shooter candle, which is basically the opposite of a hammer candle, where we have this big body at the bottom and the big wick to the top. So actionable signal back to the upside. We'll look for calls at 50.31. First targets at 50.55. And then you notice this next target is not at the top of the candle, but the bottom, because there's this gap here. There is no space, no candle between this space here. So that's what we call a gap play, and we look to fill that, and that becomes our target right there on MU. QCOM is up next. QCOM, we have that double inside bar that we talked about. So calls at 110.69. First target at the top of the first inside bar, target to the bottom, again, like so. So we can look for calls at 110.69, puts at 108.89, and let's go back and look on QCOM. And we have the ability with the Strat indicator that I created. This double inside bar went outside bar. So we gapped up in the morning. At the end of this video, I will have a gap video for you guys, so you guys can learn how to play the gaps, the morning gaps. Let's look for that blue bar as we scroll back. There's the gold bar, tells us about the 3-1 setup. And again, very rare patterns. We have to go back to, where are we here? October of 2020. Okay, so double inside bar, and that's the move that we're looking for, guys. There's the high probability play. Double inside bar, we triggered, we hit target 1, target 2, target 3, target 4, didn't hit that target 5. This, again, fantastic trade, big explosion off of that inside bar, which is what we look for, and a big opportunity for profit. And does it always happen? No, but the probabilities, again, are very, very high that this trade works out. So you can look for Qualcomm for your setups on the 28th. Roblox inside bar, that's just a single inside bar, so 1 day of consolidation. Calls at 26.73, puts at 25.46. And guys, that's a list. So make sure you guys are checking out the videos at the end of this for the gap plays. I'll put a couple more informational videos on there for you, a learning tool playlist for people who are brand new, for you guys to really get a handle of how to trade this strategy. It's a perfect week for you guys to learn this strategy and really jump on board with us and start making some profits as a day trader. So check those videos out, guys. Enjoy the rest of your week. We'll see if we can get some more videos out to you this week. Next week, again, we'll be in full flight again. It'll be a video every day for sure, plus the yearly outcome video to see how 2023 plays out for us. So good luck trading if you're doing it on the 28th, guys. I wish you nothing but the best. Hope you guys had a very Merry Christmas, and we will see you all on the next one. Bye-bye.